What's going on? This is JP Miller with D2X. Looking at some prices at the market, at what's going on in Bitcoin. I was really digging into this, and I found some interesting information, just analyzing the analysts, so to speak. So we've been bouncing around 30,000. We're currently at, if I look at the price right now, we're currently at 29.8 on Bitcoin. It's down 2.6% in the last 7 days. We're up 0.2% in the last hour. What's going on? So the consensus seems to be that we're stuck. We're stuck in this $30,000 range between 29K, 30K, and I'm not so sure. Like when everyone is saying the same thing, it makes me leery. So the stock market's having a rally, even though the Fed is beginning to raise interest rates. They're threatening to raise the rates again. So I'm thinking that the rate increase is already priced into the stock movement. We're seeing the long-term holders in Bitcoin are beginning to take profits, and it seems that, just in my opinion, that in the very near term, long-term holders are going to take profits. Bitcoin may sink around 26.5. We're going to consolidate, and then we may see increased price action from there. This could all depend on what the SEC does, how aggressive regulators remain to be, and that could be some market manipulation there. Regulators have been active. It's been throwing wrinkles in. We saw that the NASDAQ has canceled some plans on cryptocurrency adoption, and they're a bit of a wild card. We know that they are aggressive at the moment, that the Biden administration is not really friendly to cryptocurrency. Okay, is that going to be to our own detriment? In my opinion, yes. We'll see what happens. So I want to dig into this. For what it's worth, LTC having its days away, expected to have around August 1st, and the subsidy is dropping from 12.5 LTC to 6.25 LTC per block. Your market cap is around 6.8 billion. And miners are currently earning $670,000 in USD, which is about 7,200 Litecoin tokens. Not too shabby. And the whales are buying up $60 million in Litecoin. So this is interesting. Whales are getting ready for this halving event. They're buying up, in my opinion, in anticipation to sell at a higher top. We'll see what happens. This is the Litecoin and BTC pair over the years. So, if we look at this, and I can zoom in on this a bit, we can see that it has been higher at 0.025. That was 2018 at its peak. Well, not at its peak. At its peak, it was above a nickel compared to Bitcoin. But currently, it's sitting at 0.003 on the Litecoin to Bitcoin chart. So this is a bit bearish in my opinion on Litecoin. The direct BTC competitors like Litecoin, Bitcoin Cash, Bitcoin Silver, if you look at their comparison charts to Bitcoin, they have been losing dominance. They've been losing compared to Bitcoin. So we see this Litecoin is at 0.003. Bitcoin Cash is currently at 0.00817, so an 0.008 of a Bitcoin. Bitcoin BSV is at 1,000th of a Bitcoin. Hard money cannot be beat. Maybe if Charlie Lee didn't sell at the top with Litecoin, that it would be possible. But the fact that he was able to shows that Litecoin is not as hard money as Bitcoin appears to be at this present time. Yes, now Satoshi Nakamoto came out of nowhere and sold the treasury, so to speak. That certainly would be damaging to Bitcoin. I think that's very unlikely. We are seeing that these alternatives to Bitcoin are not holding up to their promises. So this is some Bitcoin speculation. We're looking at here, accumulation trends. So Bitcoin has been accumulating. This is from August 22 up to present day. And you can see we've been holding steady around this mark at a 0.54 accumulation trend. And we've been holding there since April or May of this year. So we've got accumulation between 28,000, 25,000. So as a very low floor, we could see 16.8 is what the data suggests. I think if it does hit that, it'd be extremely brief. And our accumulation score is a 0.54, which indicates that larger entities are now entering into Bitcoin. So when you have a accumulation score that's below 0.5, that indicates many wallets, like retail investors, are holding the Bitcoin or accumulating Bitcoin. Now we've crossed that threshold and we're beginning to see institutional adoption. And so we are at the early stages of institutional adoption in Bitcoin. That's what this chart tells me. In the past, 30K was our support line, is now our resistance. We're in a so-called crab market. Now, if we break through this 32K mark, then we'll have essentially recovered from the Luna crash. And what was that, about a year ago? So our next resistance line after 30K is 37K. And we'll see, it might take some time to get there. I'm expecting it'll take some time and then it will happen all at once. And that, again, is just my opinion. So CryptoQuant has been analyzing this, and we've got some quotes from Axel Adler, who is a contributor at CryptoQuant. And they are seeing that short-term holders are currently in the driver's seat. They seem to be divesting, not accumulating. Miners are also taking profits. So miners are doing well. The network is humming along. Miners are taking profits in anticipation for maybe a bit of a dip. So Axel says here, this is not a random occurrence. We have seen peak sales over the last year. And this is connected to the upcoming halving event. When the reward for mining Bitcoin decreases by half, miners require liquidity to invest in new equipment to stay competitive. So we're expecting that miners are taking their profits so that they can begin to buy the newest and latest equipment to stay competitive in the mining industry. Here's a chart that shows our short-term holder supply, and we can see that it's quite low. So the orange mark here, this is the average price, is the purple line, and the orange line is our short-term holders. And our price has been going up. Short-term holders are taking profits. Another interesting thing is the volatility. So if you talk to a rando on the street about volatility in Bitcoin, they may think that Bitcoin is quite volatile, and sure, it's more volatile than, say, the US dollar, well, considering everything. But Bitcoin's volatility has dropped way down. We can see a huge drop here in May of 22. We used to have that volatility, right? That was these exciting early days, this old west here. And now we're currently at a volatility rate of 14.77, which is lower than the peak of 23, which is around 28 here in like April or May. So we're having a net slowdown in trading activity since April. Volatility is reducing, and we are seeing that we're getting spot ETFs. Long-term holders have been accumulating. Short-term holders may be divesting, and they are currently in the driver's seat. So it's what's going to happen? How long are we going to be in this range? Well, we have a couple ideas around spot ETFs. One is that spot ETF is a launch pad. So this is going to be our rocket ship. So if you look at Morgan Creek Capital's Mark Yusko, he's the chief investment officer there. He says we're in the first stage bull run, and we're going to be at a parabolic close to April 2024. So this is less than a year away. Now he says Metcalfe's law by the Metcalfe's law model, which is used to describe the network effect in telecommunications and computer networks. And Metcalfe's law states the value of a utility or a network in proportion to the square of the number of its users. So the more users, the more value. If you have early users, that value increases quickly, but as you have lots of users, then adding one or two more users doesn't have as big of an impact, right? So he says by this Metcalfe's law model, we're looking at a fair market value of $55K on BTC. So with an approved BlackRock ETF, and we've also got the ARK ETF in play, that it will push, and this is in Mr. Yusko's opinion, that will push us beyond the $55K fair market value. We'll have some kind of a speculative blow-off later in 2024, so after April, and then that will lead to the next downturn and the next crypto winter. And I was just starting to thaw out from this one, that it seems like we're still in. All right, but that's his take. And then you've got dissenters, spot ETF as a marginal event. So FLX Networks' Julian Del Signore, who's the managing director there, says the spot ETF will pop and fizzle. The BITO unbacked ETF is an example of this. They hit 1 billion and then nothing. She expects early momentum-driven asset growth, but not much after that. And then you've got JP Morgan in here with Nicholas, not going to try to pronounce that last name, Nicholas P., saying that BTC ETFs have existed for years without attracting capital, and they fail to benefit from investor outflows. From gold ETFs. In other words, that investors would rather have gold ETFs than Bitcoin ETFs. Now, if JP Morgan says something, I'm going to go the opposite. We know Jamie Dimon has been doing this for years, saying that cryptocurrencies are a fraud, a scam, Bitcoin is nothing, and then he starts talking about a CBDC, the JPMC. So I don't trust JP Morgan. And if Nicholas, the representative here, is saying that a spot ETF on Bitcoin isn't going to do anything, that's a bullish statement to me. Bitcoin market moves in the perspective. So let's take a look at the perspective from long-term holders. It's taking all this data in. The present is rhyming with the past. Holders are acting similarly to how they have acted in the past. So the future may not be like the past, but it rhymes. Profits are being taken. We're seeing on-chain spending. Velocity is up. And if we look at the value days destroyed multiple, which is a concept that's significant to trading activity, the VDD, value days destroyed, combined with substantial price changes, indicates a higher level of market participation and potentially more volatility. And it's used to analyze the behavior of institutional investors, and it can be a useful tool for assessing the strength of market trends. So if we look at this VDD multiple, and we can see the spikes here in the orange. On your left, you have the VDD multiple, so we can see the 1, 2, 3, and then over here on the right, we have the Bitcoin price from a dime to $1 up to 100 grand at the top here. And what we're looking at is based on the extant coin days destroyed, the CDD. So we have the VDD, value days destroyed, and the CDD, coin days destroyed metric. And the CDD measures periods of inactivity each time an amount of Bitcoin moves on chain. And we take this CDD data and factor in the current Bitcoin price and its multiple, and then we compare the 30-day result with a 365-day average. In layman's terms, this VDD is able to highlight when older coins begin to rapidly enter the market to be sold. This typically happens when longer-term participants look to take profits as price accelerates in bull market cycles. So all of that is to say that our VDD is at a 1.32, which is close to the peak of 23, which was 1.37. So we can see here and here, we're close. And this indicates that we're in the bull market first stage. So you can see this in the past. This is really early 2012, 2013, this first stage, and then we had two hits, two spikes, and you can see the price of Bitcoin spiked past 100 and then past $1,000. 2016, we see a first stage bull market, and then 2017 we had the spike where it spiked above 10,000, and then we see this again in 2019 with a spike in 21, and now we seem to be doing this again. Okay, so in comparison to market value to realized value, the D broke weirdly there. Our long-term holders, LTH and short-term holders, are in the black. Long-term holders are up 1.52x. Short-term holders up 1.12x. The long-term holders seem to be accumulating. The short-term holders seem to be divesting. Short-term holders are currently in the driver's seat on the price. Long-term holders are defined as coins that are dormant for at least 155 days, just under 6 months. The orange is your Bitcoin, your short-term holders, right? They're at the 1.12. Your long-term holders are on the left side. So this ranking, they are currently at the 1.52 over here. And then we have the Bitcoin price in gray. Holders are up. This reminds me of Plan B, who says buy Bitcoin 6 months before halving and sell it 18 months after. We are getting close. We're not quite at that 6 months mark, but we're getting close. So this is where we're at here. And it kind of looks like this. So maybe we're in a point of a little volatility. Maybe we'll have a little dip. We've had a dip here, kind of like that. So again, rhyming, not exact, right? Maybe we'll have a little dip, and then we go parabolic. Maybe. And then this is just that chart up close and personal. So we'll see what happens. Regulation could play a part in this. Who knows? And when we're talking about whales, over in Ethereum, a whale just moved 61,000 ETH into Kraken. That's about 116 million USD. And this whale has been holding this Ethereum since the ICO at 31 cents. They bought it at 31 cents. So this is an investment of just under $19,000. And they're cashing this out. It seems they're going to cash this out at 116 mil. Not too shabby, just to wait 8 years. So ETH is at a $1,900 resistance line, so Ethereum's also still moving in lockstep with Bitcoin at another resistance line over there in Ethereum land, and the RSI value indicates a bullish trend, and the whale sale could cause a correction down to 1785 is what the analysts are predicting. We're seeing a 1 to 1.61 ratio support line. So that's that 1785 is a ratio support line there. And then this top QR, if you want to look at the transaction yourself, the top QR code is the Ether scan. Yeah. There you go. So that's the markets. That's what they're doing. What do you think is going to happen? What's your prediction? It's interesting to talk about. JP Miller, D2X. If you enjoyed this, like and subscribe.